definitely be trillions. It'll definitely be trillions. Not gonna be hundreds of billions. In 1980, in 1985 or 1980, 1989, I think I was researching that the first George Bush, first President Bush, Bush 41, he bailed out the savings and loans for 50 billion, and then 2008 it was 700 billion or 16 trillion, depending on whether you're talking about the Fed or the Congress. And in 2020 it was like 5 trillion, 4 or 5 trillion out in the open. This time it's going to be like maybe 10, 20 trillion out in the open, and who knows what happens behind closed doors. Hundreds of trillions. All these numbers don't mean anything when you get to this hyperinflationary point, which we're right there. We're right on the edge of it.
On today's episode of the What the Finance podcast, I have the pleasure of welcoming back Rafi Farber, the endgameinvestor. So, Rafi, thanks for joining the podcast today.
Thanks for having me, Anthony. Good to be back on.
No problem. Yeah, and I really look forward to talking with you today because a lot's definitely happened since our last conversation. I think it was at the end of last year. So, we've seen sort of banking crisis, there's monetary issues the past few weeks. Everything seems to be escalating very, very quickly. What is your current take on the situation we're seeing at the moment?
Well, that's a very broad question.
Yeah.
Well, this is I mean, it's always a different iteration of the same banking crisis. I mean, I was doing some research yesterday into the savings and loan crisis of the 1980s, 1984, 1985, 1986. It's the same stuff that happened back then. It's happening now. It just happens in a little bit of a different way each time. So, in 2019, it was called the repocalypse. So there was not enough money in the repo system. So interest rates on the overnight loans between banks shot up to like 10% overnight. And then in response to that, the Fed like flooded the system with repos, and then you could see its balance sheet start to move up after it started the QT, the quantitative tightening. It just means shrinking its balance sheet, and selling assets for dollars and retiring those dollars, shrinking the money supply. So that stopped in 2019. And they had to start reflating the balance sheet. They didn't go with straight up money printing immediately, right? It started with the repo, and then all of a sudden we had the 2020 fiasco with the lockdowns, and then they started the real money printing. So now it's the same thing. Like they started this round of money printing with expanding the balance sheet. They're no longer shrinking it, but they're not printing money straight out into the monetary system straight up. And how that works mechanically is what they're doing is the banks had a whole bunch of bonds on their balance sheets because the federal government spent like trillions of dollars. In order to do that, they have to issue trillions of dollars worth of treasuries, and somebody's got to buy these things. So the banks did it because, according to regulations, treasuries are the safest thing. So they all bought trillions of dollars of treasuries in 2020 and stuck them on their balance sheets. And now they're going down because the Fed's raising interest rates. That's what happens. This is just like basic math. So they started with expanding their balance sheet and saying all those treasuries that you bought, they're now down. So the Fed says, don't worry about them. We'll take them at face value and we'll just give you cash instead. So what was in the money supply was the value of those bonds, which are in deposit accounts somewhere in the banking system, and they're recorded as money supply. And now that same money supply is now instead of being treasuries, it's just cash. So the money supply doesn't change. It changes form. But when they start the real printing, that'll be the real pivot, which has already started, and that I think will be the end of the monetary system, and we'll head into a vertical hyperinflationary spiral that will not be stopped. So that has already begun, and I think there's just a few months left before the real desperation begins. Exactly when, I don't know, but when banking crises start, they don't stop until there's serious panic.
Yeah, it's fascinating. So as you said, like what we're seeing at the moment, quantitative easing, it's not really going throughout the system. The money at least is going back into the banks. What would be the next? You said they're going to start printing money, and then we'll see that go throughout the system and lead to hyperinflation. What would that mechanism look like?
With the mechanism, I don't know exactly what it'll look like, but if I knew, let's say, every bank in the banks, I'm not like a bank expert. I don't know which banks are in charge of which industries and which ones are the most popular ones. But if I had known that Silicon Valley Bank had attracted all of this, high tech industry startup type of, loose money, and they had bought all these they're the ones that bought all these treasuries. then I would say yes, Silicon Valley Bank is going to collapse. But it's going to be some other bank that I don't know about because I don't know all the balance sheets of all the banks. Maybe I should put it through Chat GPT and they'll tell me. I mean, that could be an interesting trick that maybe I'll try to do. But it's going to be another bank, and I'm thinking maybe it could be Deutsche Bank. I mean, we saw it happen with Credit Suisse. It's going to be maybe some GSIB, global systemically important bank. The reason these banks are called systemically important is because they have multi-trillion dollars worth of derivatives on their balance sheet. And like when people say, "Oh, trillions of dollars," people say, like, "What the hell does that mean? Like, what is like they're not worth $47 trillion? So what does that mean when they have $47 trillion of derivatives on their balance sheet?" Well, Deutsche Bank does. So what it means is that if somebody goes to Deutsche and says, "Look, I have this loan, this like 30-year loan at like 2% floating rates or whatever, and I want to make sure that my payments are the same every year. So Deutsche hedge my interest rates for me. So they'll sell you a contract to short bonds, so that if your interest rates go up here on your payments, then your position on the derivative will also rise, so you can pay the extra interest with that short position, right? So it levels out your payment. So Deutsche Bank will sell one of those contracts. On the other side, it'll buy a contract from some other bank or some other party that's trying to do the opposite thing, right? Let's say a bank is exposed to fixed interest rates, and they want to make sure they're exposed to floating because they think interest rates might go up. So then Deutsche, what it does is it takes both sides of these things and sells contracts to both sides of the people on, using it as an intermediary. And then on the balance sheet, you see like Deutsche has this much derivatives on one side, this much derivatives on the other side, and they balance each other out. So fine, right? It sounds like it makes sense. But like, what happens if Deutsche fails? Then what happens to those positions? The answer is they've got to be liquidated, because the creditors, they say, look, we lent Deutsche this money, give us our money. So what Deutsche has to do is liquidate both sides of that equation. And then what happens to those people? They're trying to hedge their risks, and they're like, oh, we don't have a position anymore. I guess we're screwed. What do? Like, and then the whole derivative complex kind of gets disturbed, and nobody knows exactly what gets pushed over and how. Like, it's a humongous multi-trillion-dollar pyramid. Like, when you see like a stadium collapse and like a dynamite explosion, you can't really say exactly which pillar is going to fall. You just know everything's going to fall, right? So that's the danger of a GSIB going down, and eventually one of them's going to go down. And we'll see who it is. Maybe it's Deutsche, maybe it's some other bank, maybe it's some other huge regional bank that causes it, some other Silicon Valley bank somewhere. Could be anything. It doesn't really matter what it is.
Yeah, and is that where you see if something like that happens, as you said, Deutsche or one of the other systemically massive banks, there's going to be, as you said, it's going to reverberate throughout the whole banking system and I guess throughout the whole economy. That's when the government's going to have to try and jump in, and it sounds like it could cost hundreds of billions or potentially trillions of dollars to try and
it'll definitely be trillions. It'll definitely be trillions. Not gonna be hundreds of billions. In 1985 or 1989, I think I was researching that the first President Bush, Bush 41, he bailed out the savings and loans for 50 billion, and then 2008 it was 700 billion or 16 trillion, depending on whether you're talking about the Fed or the Congress. And in 2020 it was like 5 trillion, 4 or 5 trillion out in the open. This time it's going to be like maybe 10, 20 trillion out in the open, and who knows what happens behind closed doors. Hundreds of trillions. All these numbers don't mean anything when you get to this hyperinflationary point, which we're right there. We're right on the edge of it.
So what should people be aware of to, as you said, it looks like this is coming. What should they be watching out for to then say, okay, it's here, let's prepare?
If it's already here, you don't have time to prepare.
Yeah. So prepare now.
Yeah, prepare now before it's here. If you can still go to a store and get your food and get what you need to survive, then it's not here. Like, when it's here, you won't be able to use pounds, you won't be able to use dollars, you won't be able to use fiat currency because nobody will want it. You'll be able to use gold and silver and protect yourself with a loaded gun or something. I would get out of the cities. I would get out of London if you're in the UK. I would get out of New York if you're in the US or any big cities. It's too dangerous there. If you're like in the top of a high-rise building, you got people underneath you that only survive because they can exchange dollars for their stuff or pounds or whatever. But if you're in a rural area or at least a suburban area and you have people that can grow food in their backyards and grow stuff and they have what they need, or local farmers or something, then you're safer. Um, so I'd say prepare now. And once you see your basic necessities doubling in price every week, it's already over. There's nothing to prepare for.
Yeah, I know at the moment in the UK, I think food's gone up 20%, close to 20% in the last year. So it's yeah,
Yeah,
it's
it's just the
for
start.
very
It'll keep going up. It'll keep going up.
yeah, yeah, definitely. So, are you worried as well about? And I guess it's all sort of linked together. So it might just be me looking at certain aspects, but there's a shadow banking system as well, where BlackRock, Blackstone, all these massive Fidelity, all these massive sort of organizations that own tens of trillions of dollars of assets on their balance sheet. Do you think that's potentially another black swan event where those companies could be the ones where that experience massive losses and then from there could bring down the system, or it doesn't even matter? We just know it's going to happen.
Yeah, they could be also another potential trigger. What would cause them to be the next domino to fall would be a generalized stock market crash because that's where their assets are. And so that usually comes at the end, though. I mean, doesn't mean it will come at the end this time, but in 2008, remember I've been watching The Big Short. I think twice in the last few weeks just to brush up on my historic details of what happened in 2008 and what surprised me, but I don't remember remembering. I should have known this, but like the housing market started to collapse in early 2007, right? That's when those subprime mortgages really started to fall, and those and the institutions that were shorting, they started to cover their shorts in 2007, but really like that was just the beginning, right? We saw some bank collapses. Then we saw what was that bank? It was Bear Stearns. That was already in March 2008. um, and then the big banks really started collapsing. Lehman, AIG. AIG was sort of a bank. It was an insurance company. Basically, and whether you're called a bank or not doesn't matter. If you're loaning money, then you're doing bank stuff. If you're a financial, right? We could just like, instead of saying bank, we could just say financial. So a financial company. So in what order are they going to collapse? I don't know, but the generalized stock market collapse happened really towards the end of everything else that had already been taken out. Same thing. We're seeing regional banks start to collapse. SVB, Signature, Credit Suisse, and next we'll see something else. And then at the end, we'll probably see a generalized stock market collapse, which should take out BlackRock and Blackstone and all these other places. And then from there, everything will fall. I mean, there's no way there's too much weight. They can't save it this time. There's not enough savings. There's not enough purchasing power left in the currency. If they even try, then the public, it'll be a fight in the street. The public will get out in front and just buy anything they can, and then prices will go to infinity, at least in fiat terms, not in gold and silver terms.
Yeah, scary to think. And if we if we look at the markets at the moment, you mentioned there could be a stock market crash. I've got a Nasdaq short. I'm feeling the pain. It's Nasdaq seems to keep going higher and higher. Silver and precious metals, they're sort of doing okay, but they haven't really had the bounce that we've expected. So do you think this is sort of the last push up until we see further pain in the markets, or what are your thoughts on that?
Yeah, well, I'm looking at the money supply. I don't think there's any way that we can reach new highs in the stock market. It wouldn't make any sense because the way I read money supply, or M2, we are in the seasonal. First of all, we've been in absolute deflation for a year, right? Pretty much, and meaning the money supply has been falling for a year. And when the money supply falls, you can't have rising asset prices. You also you should have mitigating consumer prices, or them climbing up a little bit less quickly, right? But a falling money supply first and foremost affects the assets at the top of the structure. Only last it is affect consumer prices. So you'll have asset prices affected first. So from what I'm seeing, we've never been in this intense of an era of deflation of the money supply. I'm not talking about consumer prices. I'm talking about money supply. And yeah, this rally in stock in general stocks and tech and all this other bubble stuff, it's not going to last, and it should reverse itself pretty shortly. And like I remember before the SVB collapse, on that Thursday, I wasn't even looking at any news or anything, and then somebody just emails me like, "Well, Silicon Valley Bank just collapsed, and all the bank shares will collapse." And but like, well, okay, well, this is a new thing. And then all of a sudden, the next day, SVB was gone. That's all it took. It took like a few hours. So that's what we're looking at with the general system. Like a few in a day, everything can change in a day. And I don't think it's something to fear. It's something to look forward to, because the everything going on in the world is just, it's too unsustainable. Everything going on in the world is unsustainable. It has to stop. People have to get back to sanity, and the only way to do that is to make money not free. So people have to actually work and prove their value, to continue to exist. So we're in for a big whooping, and it should be liberating for people, at least who are on the right side of things, who are prepared. It's going to be hard for people who don't, and hopefully they'll figure it out.
Yeah, as you said, it's been a bit of a free lunch over the past 10 years or so. And yeah, it's scary to think how large it's gotten. So is M2 money supply sort of the key thing that you're looking at? So once that continues to increase and you're going to say, okay, they're printing lots of money, it's circulating throughout the system, we're going to, see this hyperinflation.
Yeah. So that's a good way to put it, actually. So when M2 um, starts to really go vertical again, like it did in 2020, then yeah, I'd say that's the end. And we're headed to hyperinflation pretty quickly. Right now, it's still falling, but that's going to be reversed only when the Fed has to do something, or the entire, under threat that the banking system entirely will collapse. And they'll do it. They'll save the banking system and destroy the dollar. And with the dollar goes every other currency that's backed by it, by the World War II setup of the Bretton Woods. I mean, we're not under Bretton Woods anymore, in the sense that the dollar is not redeemable for gold, but we still have the skeletal structure of what Bretton Woods was, where it set up every other currency as subordinate to the dollar, and we're still in that system. Um, but we're towards the end of it, and then we don't have a skeleton of that system anymore, and we're back to gold and silver, which means the entire structure of production of the entire planet has to be realigned, which is possible. Just it starves a lot of people, and it makes a lot of people rich and a lot of other people poor. You know, so
Yeah, not sure if it's a better system, but if we look at sort of, I guess, China and other countries are trying to maybe overtake the US dollar, or sort of change the hegemony that US dollar has. Recently, I think an LNG sort of deal was done in Chinese yuan with a French company, I think in the UAE, and then China and Brazil have agreed to sort of do trade in their own currency. Do you feel like that's something that there could be that shift away from US dollar to the Chinese yuan, or do you think it has to be almost like a brick, precious metals or commodity backed currency for it to survive?
Okay, so on this news, I take a position that most gold bugs would not take. I don't think this is significant at all. It might be. I'll give you like one way that it could be significant, because I'm not sure if these countries that are doing this deal really think they're getting out of dollars, or if they think this is just the first step to getting out of dollars. It's not completely insignificant, because I mean, what is the yuan? The basic question is, okay, so they're doing a deal in yuan. Let's assume that they are. Fine. What's the yuan? Right? The yuan is a dollar. Why is the yuan a dollar? Because the yuan has exchange rate windows with the dollar. And why do they have those exchange rate windows? Because China and the US have this enormous amount of trade, that if that exchange rate goes out of whack, then China's economy is ruined and the US economy is ruined, at least how they appreciate the economy now. Right? At least let's just say it changes, and then neither of them want change, because they both profit off of this. So the yuan is the dollar. So and in any way, if they finish the deal in yuan, practically whoever gets that yuan in China is going to convert it to dollars immediately anyway, because that's what they do. So they're not getting around the dollar. They're pretending to. And what they are doing is creating a scaffolding or a possible system to settle in a different currency, which could theoretically be gold or silver if they wanted it to be. But so this scaffolding, I guess, might be significant, but it might not. I don't even know. The only way to get around the dollar, again, what I said was that every other currency is basically a dollar substitute, because dollar is the base currency of all currencies in the post Bretton Woods reality that we live in. So you can't get around the dollar by going on top of it in the extras pyramid. If you have gold, dollar, other currencies, treasuries, stocks, real estate, etc., right? So you can't get around the dollar by going on top of the dollar. You have to get around the dollar by digging underneath it. The only thing that's underneath the dollar is gold and silver. So if China and France traded in gold bullion or something, or a 100% convertible gold receipt currency, then that would be getting around the dollar. But that would necessitate a humongous restructuring of both the French and the Chinese economies. Neither of them want to do that, so they want to pretend they're getting around the dollar without actually doing it. That's what they're putting on a show.
What would this restructuring look like
What would this restructuring look like?
of the economy if we
Well,
went to that system?
oh, for China,
Or just
if they get it,
maybe overall global. I don't know if that's too big a question. Sorry.
it would mean a massive loss of wealth for anyone who holds a bunch of treasuries, which is mainly China. I mean, if they start trading in gold and don't use the dollar anymore, the real value of their treasuries goes to very little, if not zero. They lose all that wealth, meaning all the profit that they've been building up with these trade deficits from the U.S. and trade surpluses to China is going to be worth nothing. And for the U.S., who can't, or anyone who trades with China, who imports from China, and they can't pay in their currencies anymore, then they can't import from China. So China has all this stuff that it doesn't know what to do with, and other countries have all this debt that is now canceled. It's basically that is a reset. That's the reset that people throw that word around, reset. Reset's going to be on the public's terms. So how do you restructure everything after that? You got to start again from the beginning, and the people that have the gold, the countries that have the gold, will have the most claim on the stuff that remains, and people without any gold, without any silver, will have the least amount of claims on the stuff that remains, and so they'll be the poorest, and the countries with the most gold will be the richest. So just make your choice.
Yeah, it's interesting. Do you think the gold producers as well, or the I guess as you said, the countries who not only have it out of the ground, but the ones who have the deposits will also potentially, be the wealthy countries moving forward?
Yeah, assuming the government doesn't just steal everything, that could happen. So I mean, not even, but even countries that can produce a lot, if they don't like hold some of it in their country now, then what are they going to spend in order to dig it out of the ground? Like Venezuela is an oil-rich country, but like, so what? They don't have any money because they've exported everything, so they can't dig it out of the ground. So they have oil shortages. You can say the same thing about gold. Like, just because Canada has a bunch of gold in the ground, they don't have any gold in their central bank, so the Canadian dollar will be worthless. So what are they going to spend in order to dig more of it out of the ground? You could say maybe that the companies have some store of gold with which to pay people to dig more of it out of the ground. Fine, maybe. But then maybe Trudeau, that psychopath, will just I don't know, steal from all the gold producers. I don't know what he'll do. He could do anything. This guy's really scary. So the freest countries that allow their companies to do what they need to do, and who have a lot of gold stores in order to pay workers to continue to produce money to enable division of labor, right? What does money do? Like, why do you need money if you don't have food? Like, people ask me that question, like, what's the good of gold if you don't have any food to eat? Well, gold allows you to divide labor so that food producers can produce food. If they can't divide labor because they have no money to divide labor with, they can't produce food. So you need a division of labor before you have anything else. That's the answer.
Yeah, which is important. So if we go to today, we mentioned that I think you mentioned recently that JP Morgan put millions and millions of ounces of sort of silver for sale. There's been lots of sales. The price seems to keep going down and down. What's sort of your thoughts on, I guess, silver and other precious metals prices at the moment? And obviously they'll go up once this thing happens. But what's your thoughts, I guess, in the next 6 months?
Next 6 months, this could be over by the next 6 months. I don't know. But when we're talking about when JP Morgan put a bunch of silver for sale, these things happen from time to time, and exactly who they're selling to, we don't know. I just mean they moved it from storage to the registered category. So if they're short if JP Morgan is short some silver contracts and they have to deliver against that, then they need that silver in the registered category so they can transfer the warrant to some other player. So the silver in the COMEX has been falling for 3 years now. Since Silver Squeeze, it's been falling. I think we're now at 279 million ounces, but a lot of that belongs to the SLV ETF. I think over 100 million belongs to it, and some of it is privately owned. So how much silver is actually left to deliver against contracts, I don't know. My guess is like something like 100 million ounces or so, and that could be drained pretty quickly. We'll see. But where silver is going, well, if I think in the near term, if gold can close this week, its highs of the highest weekly close that gold closed was about 2028. So if gold can close around there, which is about $30 from where we are now, and silver can close at around 24.50, which was the area that it was in January, then I think on Monday we could have a big gap up with some kind of other banking news or something. But what I've been noticing is that every time there's banking news, the precious metals go up, not down. In 2008 and 2020, the metals went down with bad financial news because it was deflationary. But now it's the opposite. So we're starting to see the loosening of the system. It's starting to come apart, and that deflationary news of a bank collapsing is now leading to gains in instead of losses. So that keep watching that, let's say.
That's interesting because, yeah, I guess if you look at the past, as you said, 20 years, there's almost been the financialization of commodities, and they've sort of correlated quite heavily with the markets overall. But we could be seeing that, disconnect between that correlation. And, if people continue to, as you said, not just trade on paper, but actually withdraw their physical assets from COMEX and other holders, that could be where we see that price massively increase when there's less available on the market.
Yeah. Well, we're going to see it. If going back to what I was saying before, you could have this sort of situation regarding Deutsche Bank and its derivatives, where it's not that people make a conscious decision, okay, we have to stop trading paper and we have to go to physical commodities instead. And you would imagine like people all of a sudden they just realize like paper isn't worth anything, and then we have to get the physical stuff. I don't think it's going to happen that way. It could. I'm not saying it won't, but I'm seeing something more mechanical, like some kind of failure in the paper system where open interest in the paper that represents these physical just suddenly collapses and contracts very quickly, and then in that way, in sort of a domino effect, mechanical mechanistic way of shrinking open interest in commodity markets, then you'd have the physical supply and the paper supply sort of coming into balance again. It doesn't have to necessarily be some rational decision by a bunch of market actors, more than just something toppling over, which we saw in 2020. We saw open interest in commodities really fall, and we saw in nickel the same thing in March 2022. So we could see something like that. It could all just be mechanical and nobody really realizing why it's happening. It just happens.
Yeah, and then the exchanges might reverse the trades as we saw with nickel.
Yeah, good.
Who knows? But yeah, Rafi, thanks so much for your time today. I really appreciate it. So my last question is, what is one message you'd like people to take away from our conversation?
My message is you got to stay calm. You got to be rational, and you have to really, if you understand, like in a real sense, that we are on top of a giant pyramid that's been building for about 90 years, since 1933, 1934, and the base of that pyramid is gold and silver. It's not CBDC. It's not some new thing, right? When this pyramid all comes down, the only thing that will be left is gold and silver. Just like every single time there's a financial calamity and human society has to rebuild itself, we say gold and silver has maintained its value throughout time. This is why, because it's the base of every pyramid that every human society has ever built, and it's not going to change this time. So get your physical now, and you'll be part of the team that rebuilds civilization. And looking forward to working with you. And yeah, see you then.
Yeah, so sounds great. So Rafi, thanks again. So if anyone wants to listen to more about your work, I know you have a YouTube channel. Is there anywhere else people can find what you do?
Yeah, check out the Endgame Investor. It's a service on Seeking Alpha. I write 3 to 4 times a week. on Austrian economics and monetary policy and gold and silver, obviously. If you're into my way of viewing economics in the Austrian school, it'll be for you, and a libertarian outlook on stuff. If you're interested in a more biblical angle on these things, then I have a Patreon, where you can sign up for as little as $3 a month. Endgame, patreon.com/endgameinvestor, where I talk about the biblical angle on monetary and economic policy. And there's a lot to say. Or you can check me out on YouTube, Rafi Farber, and you'll find me there too.
Perfect. I'll put that in the description below. But yeah, Rafi, thanks again.
Thank you.
Thank you so much for listening, and if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.